There are two primary ways for companies to return money to shareholders, one being dividends, the other being share buybacks. But here on this channel, we prefer dividends. Although we like both, dividends is cold hard cash that we can utilize to build our share counts. When it comes to a dividend paying company, most companies pay out their dividends on a quarterly basis. There are some out there that pay on a monthly basis, but most companies are quarterly, meaning they pay every 3 months. However, companies differ on their payout schedule. You could have one stock that pays in January, another dividend paying company that pays in February, and a third dividend company that pays in March. And this cycle continues throughout the rest of the year, meaning you could typically have a 3 dividend stock portfolio and be earning dividends every single month. And in today's video, we're going to be highlighting 3 of these companies that have different dividend payout schedules that will have you earning a dividend every single month. We're going to lay out a plan to show you exactly how you can utilize this strategy to be earning $500 per month with these 3 dividend paying stocks. But before we do me a huge favor, click that like button down below, subscribe to the channel so you're notified anytime we drop new content, and let's jump into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we jump in, let me thank today's video sponsor, which is Neos Investments. They offer a suite of option-based ETFs. These ETFs seek high monthly income and tax efficiency across core portfolio exposures. The firm's founders are pioneers within the option-based ETFs, a space that has been growing rapidly over the past few years. These founders previously created and managed some of the largest option-based ETFs currently on the market today. Neos ETFs may be particularly interesting for my viewers that are looking to generate monthly passive income inside of their portfolios. Their ETFs offer exposure to major U.S. indices such as the S&P 500 and NASDAQ 100 index, with the primary objective, I just mentioned, of pursuing tax-efficient monthly income for their investors. Between their 4 ETFs that you could see here, the Neos team has ETFs that may offer enhanced income across both the equity and fixed income sleeves of your portfolio. Be sure to check them out at neosfunds.com. Investors should carefully consider the investment objectives, risk, charges, and expenses of exchange-traded funds, ETFs, before investing. All right, let's jump back into today's video, taking a look at 3 dividend-paying stocks that will have you earning a dividend every single month. These are quarterly paying dividend stocks, but they all have different payout schedules. Let's begin with dividend stock number 1, which is JPM Chase. Stock ticker JPM. As many of you know, JPM Chase is the largest U.S. bank and one of the largest financial institutions in the world today. The company has a market cap of $536 billion, and over the past 12 months, the stock is up nearly 30%. JP Morgan is led by the great CEO Jamie Dimon, who many investors actually look to for guidance on the direction of the economy, as he usually speaks about it publicly. In terms of the dividend, JPM currently pays a dividend that yields 2.3% with a 5-year dividend growth rate of 9% and a dividend that has been growing for nearly a decade straight. Again, JP Morgan is a quarterly paying dividend stock, but as you're going to see with all 3 of these companies, they pay out on different months. When it comes to JP Morgan, as you can see here on the screen, they pay out in the months of January, April, July, and October. The amount of dividends that they paid out was $1 per share through the first 3 quarters of 2023 before increasing the dividend to $1.05 for the October payout. So how much would you need to invest in order to receive $500 per payout when it comes to JP Morgan? Let's take a look. Well, the math is pretty simple with this one. We would need 500 shares roughly, which equates to invested capital of $92,500. I can already hear some of you screaming at the computer saying, Mark, where do I get $92,000 from? And I understand that, but it's important to understand that dividend investing is a process. The power of compounding is very real. Invest what you can and continually add to that on a regular basis, and take the dividend income that you receive on a quarterly basis and reinvest that to add even more shares. We're not going to get to where we want to be from day one. Dividend investing is a process. And that leads us to the second dividend stock on our list, which is Abbvie, stock ticker ABBV. Abbvie is a pharmaceutical company that has actually been one of my favorite dividend stocks to invest in for a number of years. They currently have a market cap of $311 billion, and over the past 12 months, the stock is up 16%. Abbvie was originally spun off from Abbott Laboratories about a decade ago when the company was looking to spin off their pharmaceutical segment and focus more on their medical device segment. Well, lo and behold, Abbvie is now larger than Abbott Labs. In terms of the dividend, Abbvie is what I like to consider an investor's trifecta because the stock offers growth potential, the dividend gives you a pretty high yield, and they have solid dividend growth, checking all three of those boxes. Abbvie currently pays a dividend that yields 3.5%, a yield that was above 4% not too long ago. They have a 5-year dividend growth rate of about 9% and a dividend that has been growing for 10 consecutive years, every year that Abbvie's been a public company. Abbvie is also a company that pays a quarterly dividend, but they pay on different months than JP Morgan, as Abbvie pays out its dividend in the months of February, May, August, and November. The amount they paid out was $1.48 per share every quarter in 2023. So how much would we need to invest on day one to earn $500 per payout from Abbvie? Well, we'll take $500, divide it by $1.48, which means we need 337 shares. And when you multiply that by today's share price of $178 per share roughly, that equates to the total amount invested of $59,986. Much less than what is required for JP Morgan, hence the larger yield you get with Abbvie. And that leads us to the third dividend stock on our list today, which is the Hershey Company, stock ticker HSY. The Hershey Company is the chocolate king. The company has generated strong free cash flows for a number of years, but over the past 12 months or so, the stock has been under pressure, largely due to new weight loss drugs as well as skyrocketing cocoa prices. The company currently has a market cap of $38 billion, making it the smallest company on our list today. And over the past 12 months, as I mentioned, the stock's been under pressure. Shares are down 21%. The high cocoa prices are something that's temporary. The weight loss drugs is something that I believe is overdone from that standpoint, meaning this looks like an opportunity to me, something that I'm constantly looking for as both a dividend investor as well as a value investor. In terms of the dividend, HSY currently pays a dividend that yields about 3%, with a 5-year dividend growth rate of 11%. In addition, Hershey has paid a growing dividend for 14 consecutive years, giving them the longest streak on today's list. Hershey's, as you could probably guess, pays out a quarterly dividend. And, as you could probably guess again, it pays out on a different month from the first two stocks that we looked at. They have more of a traditional schedule, paying out in the months of March, June, September, and December. In 2024, Hershey increased their dividend by 15%, bringing the payout to $1.37 per share. In order to receive $500 per payout, we would need to own 365 shares, which at today's share price would cost us $68,620. So between the likes of JP Morgan, Abbvie, and the Hershey Company, you could see that you would be earning a dividend every single month and work your way up. You don't need to be investing to where you get $500 per month on day one. Not everyone just has that kind of money sitting around. Understand that dividend investing is a process. The power of compounding is very real. Take the dividends that you receive every single month and reinvest those. You will see your share counts increase over time. Down in the comments section below, let me know, how much do you receive on average over the full year on a monthly basis in dividend income? And again, if you haven't done so yet, make sure you smash that like button down below. Subscribe to the channel, and we'll see you in the next one. Take care.